Mark, the Georgia runoffs are being cited as a potential trigger. We're trying to figure out what kind of market event it would be if, say, we get a surprise. The Democrats flip the Senate. Would that alter the economic view at all?
Yeah, it would. I think it would mean that we would get a large fiscal package, another fiscal package through the Democratic Congress, probably sometime in the summer. You know, something along the lines of what Vice President Biden proposed in the campaign, building back better. So infrastructure, education, healthcare, housing, childcare, that kind of thing, and some tax increases. So to help pay for this, the increase in spending, that means higher corporate tax rates, means individual tax rates for high-income households would rise, maybe an increase in the capital gains tax. So all those things become much more likely if the Democrats win both those Senate races and the Congress becomes controlled by Democrats. Yep.
How are those things, do you think, likely to be perceived by the market or even economists like yourself? Is there such a thing as too much stimulus at a time where we're running record deficits and there's increasing concern potentially about inflation and that massive debt load?
No, not when the economy is operating with a 6.7% unemployment rate. So that's very high unemployment. There's a lot of underemployment. We're a long way from getting back to anything one would be comfortable with, you know, particularly for hard-pressed, lower-income households, minority groups that has just been crushed by the pandemic. So in that environment, and also, you know, obviously interest rates at zero, the Federal Reserve is committed to keeping interest rates at short-term interest rates at zero until the economy is back to full employment. Long rates, 10-year Treasury yields below 1%. With all of that as a backdrop, I think it makes a lot of sense to put your foot on the fiscal accelerator, try to get the economy back to full employment as fast as possible. And then, of course, once you get there, then you need to pivot and start thinking about how to address our long-term fiscal issues. In terms of what it means for markets, I mean, for the stock market, it's probably mixed, right? Because the equity investors will like the stronger growth. That means more corporate profits, but they certainly won't like the higher tax rates, the corporate tax rates, capital gains. So the net of all that is probably a wash. For bond investors, it probably means higher interest rates. And that's why I think, like today's actions, you mentioned stock prices are down, but bond yields are basically flat to down. So, I doubt today's actions related to any significant degree to what's going on with regard to the Georgia races.
Mark, what portion of the population needs to be vaccinated to have a meaningful boost to the economy? And when do you expect that to be achieved by?
I'd say, Wilfred, I'd say about half. The consensus view is, and probably what's embedded in markets is that half the American population will be vaccinated by mid-year, let's say by July 4th. And if it looks like that's not going to happen, I think, investors will become uncomfortable with that because it's not good for the economy. Given the rise in infections and hospitalizations, deaths, and this recent strain in the UK, which is causing the British to shut down schools. I mean, if that comes here to any significant degree, and that'll create a lot of problems for the economy. So the quicker we get these vaccinations, the more likely the economy will be able to kick into gear. But I think at this point, I'm expecting about half the population to be inoculated by the middle of the year. We're slow we're at the current point in time, but I think we'll gear it up. And I think the Biden administration will bring in some professional management and get it done.
Mark, thanks for joining us. Much appreciated.
Sure thing.
Shepard Smith here. Thanks for watching CNBC on YouTube.